Alright, ladies and gentlemen, welcome to today's video where I'm going to introduce a very effective and profitable trading strategy for you all. All we are using is the parabolic SAR indicator, which are these white dots above and below the candlesticks, and the momentum indicator. Please stick around to the very end so that I can show you guys the settings for the indicators, but for now, please just focus on how to do this. Learn it to the best of your ability so then you can put the settings in and then go implement it into your trading. Firstly, we need to update our settings. So our trade time is going to be 5 seconds. We are going to be trading on currencies. It will be 5-second candles. And also, we'll take this back. It will be 5-second candles. And obviously we have our indicators here. The amount that I'll be trading with is $100, but before we do that, I want to introduce the strategy to you all. How it's going to work is, let's firstly break down the indicators. Let's start with the parabolic SAR. How the parabolic SAR works is when the dots are above, like this, there will be a downtrend. As you can see, when the dots are above, we have a strong move to the downside. The complete opposite is true for an uptrend, where when the dots are below, as we see here, all the way up, we follow an uptrend. Another way, or an easy way to know, is when the candlesticks are above the dotted line, you're in an uptrend, and when the candlesticks are below the parabolic SAR, you will be in a downtrend. We can now combine this with the momentum indicator, right? Because we want to be trading with the momentum and with the volume. If we aren't, we are just trading with the complete opposite direction of the trend. We might get lucky, we might be in a 50-50 situation and predicament, but why not be trading with the trend of the parabolic SAR as well as the strong momentum which is given by our momentum candles? If we put these together, it will give us very, very strong expected value for a lot of candles in the direction that we are trying to trade. So because we're taking 5-second trades on 5-second candles, we are going to be trading one candle for one another. So if we wanted to enter here, we would enter at the bottom of this candle for a 5-second trade, and it would last up until the very end over here. We aren't trading for movement, we are trading for the color of the candle. I need you guys to realize that. We are trading for the color of the candle. And as you can see, in these moments, in these phases, and in these cycles, we will have more candles going in the direction that we want, like here, than going against us, like here. This gives us that positive expected value that we are looking for, because in binary options, because they give you a 92% payout, right? They give you a 92% payout. You need to be above 52.08. You need to be above 52. Let's do it again. 52.08% win rates. There we go. You need to be above this percent win rate in order to be considered profitable. And when you are trading inside of a cycle like this and taking buys inside of a cycle like this, you will have more candles going up than going against you. This gives you that positive expected value, and you will have a win rate above 52.08%. Let's look at some more examples. And how it's going to work is, you need to start at the beginning of a cycle. So how can you identify the start of a cycle? Well, as you can see, this was in a downtrend parabolic SAR cycle. But when the candle closes above the dots over there, as we can see, it will start to form dots below, indicating a possible move to the upside. The same is true in the opposite direction, where, for example, here, we have our previous uptrend, which was like this, before we had a close over here below the dots. After that happens, the dot will form above, indicating a potential move to the downside, which is exactly what happens over here. We can then combine this with our momentum. So when we see a change in the trend and we start looking for trades once the cycle has changed, we look for bars that are downwards. And all of these, as you can see, are downwards. Combining these together, we are able to capitalize on these moves, and we can catch strong expected value by entering on each and every single candle. So you guys, you need to be selling on this, on this, on this, on this, all of them, all of them, all of them, all of them, right? So now you're probably going to be wondering, what is the risk model? How the risk model works is there's three options. You can either make 1 unit, you can either break even, or you can go down 3 units. So how this is going to work is, in a cycle like this, we would see that we broke below the start here and a new cycle formed. When the new cycle forms, we ignore the first candle because this is the candle that started that cycle, right? So we ignore this first candle. But then after that cycle starts, we need to start looking for our bars at the bottom. If the bars at the bottom are providing us with the same direction, so because we're trying to sell, right, if we're below these dots, we're trying to get bars that are below this middle line, and as we see here, we start getting dots there, so we start getting bars there and also there. So now we know we can start selling. How this is going to work though is we need to either aim for +1 off of our first trade, a break even if we do go down. So if we do go into negatives, if we do go into the negatives, right? Or if we do manage to reach -3, we will get out. So for example, on this cycle, we would have reached +1 on our first trade. So +1 is over here. +1 is over here. This would have been the candle we would have sold on because we had that close below over here. We were trying to look for sells. We saw our pink candle over here, our pink bar. So we would have sold on this one and we would have reached our +1 units. And now, because we reached our +1, that is considered our take profit, right? And then we move on. However, let's say in a different example, our first 2 trades, we had losses. So we had like a loss there and a loss there. This takes us to our next model, which is this, the break-even model. So now, because we go into the negatives, we need to start trading towards 0 units. So because we lost 1 unit there and a unit there, we are down 2 units. And we need to keep selling until we reach break-even. We would reach break-even after we win this one and this one, because these two would cancel out. Let's keep looking at a couple more examples. I just don't want to delete my stuff here. Okay, there we go. Let's look at plenty more examples. I would just like to move this to the top there. Let's look at more. So here, right? This is a perfect example. So we break above, right? We break above our dotted line. We then get our dot there. We are given our bar over here telling us we're going to go up. Then we can take our buy. We reach our +1, which is considered our take profit. Therefore, after that cycle, we move on and we find a new pair to trade. We can then do it over here, for example, where we break above. This is our first dot over here, the start of a cycle. However, as we can see, we are still given selling pressure. So what we have to do is we need to wait for buying pressure to kick in. After the buying pressure kicks in on this candle, we can take a buy on the next candle and we would win. This will give us the +1 profit unit that we are looking for. We can now continue this on multiple examples, such as this one, where we break below. This one over here, our first dot forms above. On our first candle, does it give us selling pressure on the bottom? Yes, it does. We take a sell on this one and we win. And that would give us that +1 unit that we are looking for, right? Let's do a couple more examples. Here's another one on a sell. We get our dots above after breaking below here. On this sell here, we're trying to look for sells going down. We get a strong bar over here telling us we're going to go down. We take a sell and we would win. This gives us the +1 that we are looking for, and then we get out and we move on. We would be in significant profits after achieving all of this. So here is a good example of understanding your risk and getting out when there is a loss. So we break above the dots over here. We start a brand new uptrend cycle because we believe the price is going to go upwards. because we were given a strong bar over here to try and look for buys. Unfortunately, what happened was we lost 1, 2, and 3. This meets our threshold of our stop loss, which is -3, and therefore we would have to get out. But because of the previous wins that we did have, it's okay. We need to take it, and we need to be smart as traders in our risk. So we will take that loss, knowing that we will continue to win in the future. Let's look at plenty more examples. Here we break above our dots. We're looking for a buy here, as we see. There we go. We are given strong buying pressure at the bottom there. And we would lose on this first one, right? We would lose on this one, but then we would break even on this one, which then counts for our break-even model. So we reach our break-even, we would move on and find a new pair to trade. But I'm just going to stick on this one to show you guys because it saves time. Here we break below the dots over there. We get our first one at the top telling us we're going to start selling. We are then given strong buyer selling pressure over here. Therefore, we can take sells. Wait, sorry, it was on this one. Strong selling pressure on this one, telling us that we're looking for sells on both of these. We would win on our first one, and then we would move on. Because remember, the 3 models is either... It's not typing. Okay, it's fine. The 3 models is very simple. It is either you're going for a +1 unit on your first trade, or you go down a unit or a couple of units before you go down to -3, and then you need to work towards 0 units, or you accept a full stop loss, which is -3. Those are your 3 models. It's either +1 off of the first trade, or if you go down into any minus units, you trade until you reach break even and you move on, or you keep trading until you hit -3 and then you stop. Those are the smart risk management models that you need to follow. So here would be a break-even example where we have our dots over there that we break above. We are given strong buying pressure over here because remember we're above the dots, so we're looking for buys. We would lose this one and this one on the buy, but then we would break even after these 2, right? Because they would cancel out. This would be -2 and this would be +2, and therefore it cancels out and we move on. You guys can't get greedy for that extra 1 unit when you're trying to break even, because you might get unlucky and a move like this might happen against you, which is what you don't want. Let's look at plenty more examples. And it's a very easy way to trade, guys. You're either going for +1 unit, breaking even, or accepting -3. And it's a smart way to trade. So let's look at this one. We break below, dots above. We're told we're going to try and sell. Strong selling pressure. We lose 1, we lose 2, but then we sell, and then we break even. This is our break even trade over here. And it's fine, because we did not lose any money at all. Let me just brighten my screen. Plenty more examples. You can do it over and over, as long as it stops from a cycle where the dots are above to a cycle where the dots are below. You can start looking for buys and sells, given that your criteria is met with your momentum indicator. For example, here, it breaks above over there. We were given strong buying pressure. Then we would have this candle over here, which we would have bought on, and we would have won. And then we get +1. But remember I said, do not get greedy and go for another unit, because what could happen? You could get destroyed and messed up by a whole sequence, and this is going to destroy your expected value and your profitability. You need to be smart with your risk. That's why I said you either go for +1 on your first unit, or else you would going to get wrecked. You're going to get wrecked by these 5 pink candles in a row. That's why you go for +1, or if you go down a unit or a unit or 2, you go for break even, or if you go down 3, you accept it. Those are the 3 smart risk management. If you follow the risk management, if you follow a system like this, you will make money. You will make money. Let's look at more examples. Here we have a break from an uptrend, into a downtrend, indicating that we're going to go down. As we see, we do go down, but we need to trade for profit or break even. Because this is the first candle, we were given strong selling pressure here, telling us we were looking to go down. We would lose on this first trade, but because we go down 1, we need to go until we break even. So if we go down 1, or if we go down 2, we need to work towards break even, or it goes to -3. Either of these, the -3 or the 0, is where you get out. Here we would have broken even and we move on. Over the long run, in all of this, we would be profitable. Let's keep looking. Here we have another example where it breaks above, right? It breaks above. We get our first stop below. We have buying pressure because we're looking to go to the upside since we are above the dots. We take a buy and we win on our first trade, and we only accept that 1 unit of profit off of our first trade. That is it. You can only accept profit on your first trade and nothing else. Let's look at a couple more and I'm going to end it there, guys. I think this is a very, very effective trading strategy and is extremely valuable and can make you a lot of money if you follow the risks. So the checklist. Let's create a checklist for this. Number 1, have we changed from a cycle into an opposite cycle? How does that happen? We broke above on this candle, right? We break above on this candle. Now, because we're in a new cycle, we need to watch our momentum. If our momentum aligns with our candle and the direction that we're trying to trade, because this is telling us we're trying to go up, this is telling us we're trying to go up. If that aligns, we can take trades in that direction. Okay? If we win, which we do here on this buy, we accept +1. However, if we lose, we accept -1 and -2 all the way until a stop loss, which is -3, or we trade both of these, right? The -1 or the -2 until we hit break-even units. That is the smart philosophy and risk management behind this all. Let's do 5 more and we will end it here. We break below, brand new cycle starts, we're looking for sells. Our momentum tells us and aligns it with us. We look for a sell. We win on our first trade. And remember, I said only take +1 units on your first trade. Why? Because if you get greedy, you will get destroyed as a trader. And what happens if you went for more units? You would get destroyed. I hope you can learn that lesson. Let's do 4 more. Here's going to be a classic break-even example. So, we break above on this one, right? Starts there, we're looking for buys. We're given that strong indication by the momentum and the volume of the momentum indicator, looking for buys. We would buy on this one, and we would actually win and take that +1. And then we would move on because we've taken +1. It's, guys, I'm going to keep repeating it. It's either +1, break even, or -3. If you hit either of those, you get out. Okay? Simple. Let's do a couple more. Let's do 3 more. Here's a selling example. We break below, dots are above, tells us we're looking for sells, right? We are looking for sells. Our momentum gives us that indication. We take a sell and we make money. Few more. Let's go 2 more. This is a break-even example where we break above this dot with a dot below, telling us we're trying to go upwards in the long term. We are given a strong buying signal over here, right? We would buy, we would lose here, but then because we're down 2 units on here, we either, because we're down 2 units on at the moment on these 2 buys, we either trade until we go -3 or we trade up until break even. As we see here, we win 1 and 2. So this would have been our break even trade that we would have taken over here, which is fine because we do not lose money. And finally, one more example, or let's end on a win. Let's end on the win because this is another break even. Breaks above our dots. We start our cycle here. And as a matter of fact, we would not even enter this. Why? Because we broke above. It's telling us we are looking for buys. We have broken above here, above our dotted line over there. However, our momentum doesn't give us that indication up until this bar over here. Once it gives us that bar there, we know we want to go up. And we would actually, as a matter of fact, win this. Look at that. you need to put it all together and you will make money, because we completely ignored and filtered out all of these losses until we were given the one bar that actually tells us we are going to go upwards. And what happens? We take that and we take +1 and nothing else. +1, break even, or -3. Because another lesson that I've been speaking of already, if you get greedy, you will get destroyed. And what happens here? If you did eventually try to go for more than +1, what would happen? You would try to buy, you would lose. Try to buy, you would lose. You would lose. You would lose. Do not get greedy. Stick to the rules. +1, 0, or break even, and -3. This is the smartest risk model sequence in binary options that no one is teaching you, that you need to realize. Last one, and then we'll wrap it up, guys. So this is going to be a break even. I'd like to actually end on a win. So let's do it. Here. It tells us we're going to sell. Right? We're given that indication over here. We sell, we lose here. But because we go to our -1, we are trading for break even, or we are trading for -3. But what happens here is we trade and we hit break even, so we accept break even and we move on. Let's do a win, because I always like to finish off with a win. Here we go. So here we would break below, dot forms above. We would look for sells, given that we have strong momentum to the downside. What happens? We get the candle that we are looking for, and we reach +1 and nothing else. Why? Because we were going to try and sell and we were going to lose, especially on this gap. Look at this gap. We were going to lose on this jump up over here. We were going to lose on that and on that, and then we weren't going to make money off over here because we were swapping into a new cycle. So always remember the risk model. You have to go for +1. You can't go for more. You can't be greedy. And that is it, guys. That is the strategy. So let's reveal the indicator settings. Let's move myself here. Okay. The indicator settings is the parabolic SAR, specifically the standard settings, 0.02 acceleration and 0.2 maximum acceleration, as well as momentum 7 period, and specifically the bar style. And that is it, everyone. This is a very, very, very effective trading strategy, which you can all use and make significant profits with. Given that you follow the system, you know exactly when to get in and start your trading, given your momentum, given your trend from the parabolic SAR, and following smart risk management. Either you are taking +1 units off of your first trade, or if you go down, you either trade until you break even and get 0 units, or until you hit -3. If you hit either of those 3, you move on and you find a brand new cycle to trade. And that is it. And we will be back tomorrow with a brand new lesson. Tomorrow will not be a strategy. Tomorrow will be a lesson. So I hope you guys are excited for that. And thank you.